Welcome to Upside, where we look behind the headlines in the news affecting European venture. Today, it's Mads, Lomax, and myself, and we're looking at Davos. We're going to drill down into what's happening for Europe. Look at the 28th regime. It is happening. Has China already won AI? A science collapse in the US. We've got a 2026 year of the IPO, not the year of the horse. SaaS, is it dead already? We'll talk about that, and plenty of mega deals of the week.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Gentlemen, my lovely people, how are you today? Mads, you just flown in from sunny climes. How are you feeling?
Great. I just had a great week. Met lots of interesting businesses and investors in the Gulf. Talked about investments. Talked about our portfolio. Lots of
stuff.
Synergies. And yeah, just lots of opportunity for the businesses in the region. It's a fast-growing place. So it's
Wonderful,
great.
wonderful. Lomax, how you doing, dude?
Yeah, I'm all good. Yeah, this week.
You look perplexed.
No, we've got a big storm coming through. So I don't know, whether it's what the sun's out now. Nazaré, there's going to be 100-foot waves tomorrow. So I'm going to be driving up with the kids to
Are
watch,
you doing a
amazing.
100-foot wave?
Well, I'm not doing.
Tell me that we're going to see images of you surfing a 100-footer. Do people?
No, I like any
generated.
like any VC. I'll just be sit there, watching on the sidelines.
Yeah, telling everyone else what to do, right? Sure.
Exactly. Yeah. Yeah.
But in all seriousness, is there a size that people just don't do?
No, people want to go as big as possible.
Oh my lord,
for sure. They want to set records.
All right. Well, listen, let's crack on. We've got a busy docket today. First up, something that I didn't tee up at the front was the fairly recent news, but this data center kerfuffle. So there is a £1 billion data center that was planned for Ivor, which is near London, and it's been stopped. The government has admitted that it made a mistake in granting the planning permission. So campaigners opposed on energy use and environmental impact and water, which we all understand, but it was all guns a-blazing. And there aren't that many of these mega projects going, and we all know that we need them. I think there's maybe another 4 or 5, including this Greystoke project. So how can they survive planning scrutiny, and or are we just screwed? Mads, can you start this one off?
High level, this is bad news, but there's some good news coming through, which we'll touch on at the beginning, so we can end with some upside. But the bad news is the UK is under pressure for reasons we've discussed before to build out its data center capability, and is majorly constrained both by energy but also by local planning laws. So as a reminder, data centers historically have to go through the normal planning permission channel in the UK, or zoning as the Americans call it, and that's done at the local level, which tends to mean that you end up with a lot of local resistance. This is where the NIMBYs come in, right? They don't want a data center in their backyard. So this is just an example that came up in the headlines today, where a £1 billion data center being built just outside London, which had been initially approved after an appeal by central government. They'd actually found a way, or came up with a way, not to have a specific environmental report saying it wasn't needed. But now a judge has said that, and the government have admitted that they were wrong to make that assessment, and they now need to go back and conduct the environmental assessment. And it may be ultimately that this is approved, but this is just like another spanner in the works for people trying to build out critical national infrastructure.
Because this will be years off now, right? If it is approved, it'll be a massive delay, right?
Yeah. Interestingly, though, I would say, so this went through, originally, the genesis of this project is it went through local planning process, right? As I said, it was turned down originally, and then the developer appealed, and it was approved. It seemed erroneously now by central government, it was approved. Now, very interestingly and excitingly, as of literally like this week or next week, data centers are now being designated as national significant infrastructure projects. The law is actually coming through, which means that if you are building a data center, you can forget about the local planning regime and go straight to central government for what's called a developmental consent order, a DCO, which will get you an expedited consent, will also help you do all the compulsory purchases of relevant land that you need, et cetera. It's a very strong instrument that the government has kind of put in place now for data centers. So this is really good news going forwards, which means that for people building data centers, this year, next year, etc. And they can now apply straight to central government rather than having to faff about with the local planning regime. So I think that's good news. Yeah.
Does that remove the need for the environmental impact assessment?
That's a good question. I don't know the answer to that. I think it will certainly make it a lot easier because a lot of this will fall at the discretion of central government, and they won't have to have all the local rules apply. However,
circumvent the bats and the newts.
Yeah, but even DCOs will still be subject to judicial review and everything, right? So if people want to stick their oar in, they can still appeal against these things. So it's not going to be plain sailing, especially if you want to keep, London is the biggest data center market in the UK. It's like 60% of data centers. Well, in Europe, yes, true. But yeah, it's obviously in the UK too. Especially if you want to keep building data centers in and around London, you're going to have, chat reviews the whole time, which is now why people are starting to build them, and there's a big $10 billion project up in Northumberland now. Obviously one of the big, we have these now AI zones that have been launched following the Matt Clifford review last year, and those are going to be located mostly in Wales, actually, not around London, which I think is sensible, as long as you can get the power to them.
But guys, they don't have to be around London, do they? They can be in non-NIMBY-esque areas.
Well, which is why, no, but it's an access to power, right? And that's why I think people are thinking creatively, looking for former factories, places that actually have access to historically access to power.
Yeah, makes sense. Mads, what have you got on this one?
Well, I think the EIA question, the environmental impact assessment question, is important because even if you have a growth zone, if you still have to go through the EIA, and if that still becomes subject to consultation and objections, you're going to be into the same NIMBY theater.
Yeah, so we've got another 10
years. For me, that's the essential piece. My impression was that wasn't fully solved here, but you're probably, Lomax, as our resident legal eagle, you're probably more up to speed on the peculiarities of the law.
Even if you go through the DCO route, I suspect that there will still be the environmental impact assessment survey, which is always going to be a problem. So
it's a huge problem. It's a huge problem because it's asking the wrong question. It's designed to decide whether to permit something. But we've already decided that we should permit these data centers. We have already decided that building stuff is essential for our economic future, and AI is essential for our economic future, and we need to build this stuff. And so putting in place an instrument that's trying to decide whether or not we should do something we already decided to do is just slowing us down. And that is exactly why we have, we're struggling to eke out 1% growth instead of 3 or 4% growth.
Yeah.
Now, people were very quick to attack the civil servant that made the mistake of permitting this initially and sort of saying, look, it's a logical error. But I can see why people have done it, because the message from on high has been, we're going to root out all the blockers, all the people that are going to stand in the way. And so the person in question, man or woman, I don't know, thought they had found a way to bypass this EIA step. And it now turns out there's case law that prohibits this. There was a kind of a Leveling Up and Regeneration Act in 2023 that removed the power of ministers to amend the EIA regs by statutory instrument, so without going through a legislative process, making it harder. I mean, otherwise the government could just have tweaked the rules, but they can't do that anymore. So we've been tying ourselves, in knots over this stuff. And so, I mean, kind of all the commentary around the new fast tracking for data centers is good. I hope they're going to go the whole way. We need this stuff, and fast.
Yeah, and it's a reminder that, while we in this podcast and people we do business with are all pro data centers growth, etc. We have 3 gigawatts of data center capacity at the moment. We're trying to grow that to 8 to 9 to 10 by 2030. But there's a bunch of people who aren't interested in this, right? And they're more interested in the EIAs, the environmental impact assessments, etc. And so, unfortunately, there is a little bit of a lowest common denominator that applies here in terms of the rollout. So, the government are going to have to be really, really bold on pushing this through.
Yeah, I think it's also on us to talk about a different narrative here, because I agree with you. There will always be a small proportion that are more interested in the newts than the economic prosperity of our country. But I promise you, most of the citizens in this country will be more interested in, do we have economic growth? Can we get our deficits down? Can we get our tax rates down so we can get business going again? Can we create the jobs we need? That will be the interest of the majority of people. But the problem is we've created the legislative system where it's always, as you say, the lowest common denominator and a small minority that can block things from happening. And it's just, it's poisoned for prosperity.
I've got a feeling they'll find a way of pushing this through. I think it's too big an issue now. It's too big a nut to crack.
No, this particular data center, I think, but when you read the reports, will actually end up going through. But if you lose 9 to 12 months, like think about it. You have financing lined up. You have the construct. There is like so much construction going on now in data centers. If you have your project delayed by 9 to 12 months, well, what if your contractor may go and work elsewhere? And all of this stuff, all the second, third order consequences are very, very big. But ultimately, I'm very interested to see how, now that we have this new DCO, like developmental consent order straight to government, central government, application process, fast track for data centers. I'm very excited and interested to see if that actually speeds things up.
Let's hope so.
I hope so.
Guys, I want to talk about Davos. I was watching all the talks and all the panels, and I don't normally tune in, but Mark Carney was the chap that got me to really pay attention. I absolutely loved his speech. Did you guys see it? Did you watch the recordings?
I think it was by all accounts the knockout speech of
it
West.
Was. I think it was. I mean, watching Besson and Trump and others, and there was a lot of posturing, as you always get. There was a little bit of performative kind of gamesmanship, which of course you're going to get because you need the click rage. But Carney, I thought, just knocked it out of the park. There were obviously more than him going on at Davos, but I thought he was just a masterclass in statespersonship, and it was just a beautiful call to action. His point being basically the world is fractured, we need to accept it and move on, and he is offering a solution for the middle powers, which I thought was an interesting take. Other items that caught my mind, some obvious, some maybe not so obvious. Obviously, we need to lean into this strategic autonomy, stuff we already know. The only question here is, can Europe afford it? I saw the PwC's global chairman, Mohammed Kande, said that nearly, or just over half of companies are seeing little measurable benefit from the current AI investments. So he was challenging hype versus execution. I read it as 44% of installations are succeeding, but you can read it however you want to read it. I think that's pretty good. Watching Musk, I don't think he said particularly that much. I thought it was a lot of self-promotion, obviously talking about AI and robotics, how his robots are going to make work obsolete, which I think is utter nonsense. I often think the chap forgets how to be a human being. Will we see Tesla's world of abundance as he's pushing? Lots of talk of human AI, human-centered approach to AI. I have no idea what that means. And the IMF is warning of any kind of correction in AI causing much more of a rift. So where should we start here? Mads, do you want to kick this one off?
You're right. So many treasures gems to pick out. I mean, Carney clearly standout speech. And I think the thing he said was, look, the old order is not coming back, and nostalgia is not a strategy. And I think we can all agree with him on that. What was interesting is he was talking about middle powers, and he sort of said, look, middle powers shouldn't be negotiating bilaterally, because I think what he's talking about there is if the European countries and Canada and others kind of middle-sized countries, they start doing individual deals with China and with the US, we're going to be picked off one by one, and that's going to be the worst possible outcome for
which is
for
kind
us.
of funny because actually that's in the context of the UK, that's kind of been Starmer's strategy, like he's been leaning into a kind of very bilateral approach, right?
And it works right up until interests are no longer aligned. And as you saw, Trump had absolutely no prevarication about threatening to slap tariffs on the UK if we are saying, look, we're going to stand up for the sovereignty of other European countries. I mean, it's the strategy of empire since the dawn of time, right? It's divide and conquer, split them up and have them pick off one by one. And
Europeans getting a taste of their own medicine now, no?
Oh, absolutely. And now I think if you think one step further, I would say there was this idea that being a middle power that could punch above its weight was once seen as a viable strategy. That idea is now dead completely. I mean, you have to unite and form stronger blocks. There is no space for middle powers in this because you're just going to get steamrolled. So unless you can work together and collaborate, you're toast. And I think that's what we've seen without the shadow of a doubt now. And this is a new world, right? I mean, we used to be able to play the middle power game because interests were sufficiently aligned with the U.S. that you could sort of, you'd be under the protective blanket of U.S. military supremacy and sort of, find a way to navigate. But, if that's threatened to be taken away at any moment's notice, you're left naked, and then you can see what happens. many, many other things to pick up on about kind of Canada's relationship to Europe, if you want to go there. There's Jensen Wang on robotics, which I thought was really interesting. There's AI and jobs. There's developers and what's going to happen. So, Dan Lomax, what's top of the stack?
What do you think,
for
Mads? Jensen was blowing a bit of smoke. Blowing, like as in.
I read him like that as well. I read talking your own book, talking your own game.
Talking your own book. No, but also just like being in Europe and also like trying to praise, a bunch of his customers in Europe around the robotics opportunity in Europe. No,
I didn't find any meat in it.
Listen, I thought what's interesting is he's sort of saying, look, forget competing on foundational models, but Europe's opportunity is physical AI. You've got the engineering heritage. You've got the legacy of making, the best engineering and machinery and technology, kind of hard physical technology in the world. Lean into it. Become the best at that. Now, the problem is we have been selling some of our crown jewels. We sold KUKA to Midea in China. We sold ABB Robotics to SoftBank. So we've been selling out all these robotics companies.
The ABB deal was at the end of last year as well. It's it's a recent thing.
It's very, very recent. And so, 1X from Norway, they moved their headquarters and actually all of their operation from Norway to Palo Alto. So it's clear that we haven't worked out fully how to lean into this opportunity yet. But I think he's telling us what we need to do. We need to lean into the stuff we're good at. We need to put the AI layer on top of our manufacturing capability.
Well, it's following the Chinese way of doing it, isn't it, Mads? This is what the Chinese have been doing for a little period of time now.
Yeah, I think they come from a very different perspective. And the question is, what will be required for us to catch up and can we do it? What they needed to, so they were behind in engineering and technology, and they've proved by really focusing on those things they could catch up. I think we already had so much of the tech, so much of the engineering capability. Our problems are not technological, they're political. The problem we have is all the fragmentation.
And capital, right?
The capital is here, Dan. The money is
I
not like
know,
Europe
but
is a
it's
full
just
place,
not going in the right direction.
which again is a political problem. So it all comes down to how we have organized ourselves politically. And I think I think Jensen, he talks about it as an engineer. He's like, just focus on the stuff you're good at and things will work well. I think the challenge we really have to grasp is how do we organize ourselves politically so we can unlock the engineering capability, the commercial capability, the capital, as you say, Dan, we need. It's purely a political question. Is there will? And the fear one can have is things are not yet bad enough for us to take some of the difficult decisions that are needed. But at some point, hopefully we will do it because we can't continue, working or not working the way we are.
Two challenges to this notion of selling the crown jewels when it comes to robotics, Mads. It's like, well, firstly, those companies still are in Europe, right? They're still employing people, building manufacturing here. I guess the risk is still the IP gets stripped out, but they're still on the ground in Europe. Number two is, should we be indexing on these companies, like, subsidiaries of ABB Robotics? You mentioned 1X out of Norway, and it's a shame they've moved to the US, but there are plenty of amazing robotics companies coming through now that you and I know well, and some of them we don't know, across Europe. And aren't they the kind of future champions of this category? No?
If we can get them the capital they need, if we can make it easy enough to do business, if we can allow their business partners to build the data centers with the AI capabilities they need to train the models, if we can get out of our own way, then absolutely yes. I agree with you. I
believe we have the impetus, Mads. I do believe we have the impetus and have been given permission. I do believe there might be some inertia, but I do believe we will do it.
Here is my bear case, Dan, just to share it with you and bring it out there. Until we have a European leader with a democratic mandate, we will not be able to cut the Gordic knot of this.
Are you talking about the United States of Europe? Are you talking about
the leader of the Commission or the European government has to have a democratic mandate? What happens every time you see somebody in Brussels say, "Listen, we got to federalize here. We got to take a joined up approach." It fragments. It runs into local opposition. It's stifled. And we're going to pick up on EU Inc. later. I promise you that is going to face a world of hurt when you go to local implementation across the
Mads is clearly a subscriber to basically the big bang theory of history, right? Which is that big people at various times in history. I think there's a very Victorian approach to this, and but some historians really subscribe to this and some don't. That it requires like big men, or historically men, but it could be women too, to drive big things at big moments in time. And if you look through history, that's what's happened. And actually, Trump has kind of brought back this kind of like people who believe more and subscribe to this theory of history, right? So Mad seems to be clearly subscribing to that, and I don't disagree. By the way, I mean,
Well, from memory, I think both Elizabeth and Victoria were women, and
no,
obviously.
sorry, I'm just using. You could use the word big person, but historically it has mainly been.
To be honest, I think sometimes it's more about how you organize yourself. Of course, you have to have the right leader and the right leadership, but the institutions have to be set up to enable those leaders to be successful. Now, we could think whatever we want about von der Leyen, but she does not have the institutional setup to succeed with the reforms she's trying to do.
Nor the personality, it turns out.
I've been reading the 21 Lessons for the 21st Century, the Yuval Noah Harari book, and it does talk very much that kind of game and how Putin's and the Trumps and the big people have triumphed over history. But one thing I did want to touch on before we move on from Davos is this human-centered AI, this job destruction, this employment issue. And I saw Demis talking about it and Dario talking about it, but Mads, what would you pick up on the AI and jobs piece?
I mean, the headline that is having everybody running scared right now is it looks like entry-level job postings are down since Jan 23. And so people are saying, look, it's
right?
Entry level, young people, exactly. It's kind of the graduate jobs, people out of uni can't get jobs. And the big question is that caused by AI? It seems that there is suspicious correlation with the end of SERP and the increase of interest rates that have made companies slam on the brakes of some of this hiring. We can all see the impact of AI and how much more efficient it's making us. Now, I personally happen to think that as we become more efficient, we're going to want to do more stuff. It's not like we're running out of problems to solve in this world, but businesses will be organizing themselves differently, and that can have implications for how they hire and how they structure themselves. And yes, there could be an implication on the job market.
I don't believe in mass unemployment, and I do believe there will be shuffling, as we've seen in engineering and coding. But I don't believe we're going to see this kind of massive dearth of jobs. And there was a very interesting article in the FT taking some of those reports to pieces a bit and connecting that ZERP period of time with the launch of ChatGPT and trying to make sense of a bigger picture rather than just saying AI is killing entry-level jobs. But Lomax, what would your take be?
No, nothing really. I think it's probably more related to the macro economy than to AI specifically in the context of these entry-level jobs. LLMs had really had barely scratched the surface when these numbers come from in 2023. So I can't imagine law firms, accountancy firms, any other white-collar jobs making those decisions in that time based on what was happening in AI, right?
Yeah, no,
it's kind of now going forwards that you might expect to see that. But I think it was more macroeconomy driven.
Let's get into another announcement at Davos, and has been talked about. We've talked about it lots, and it's been going around the social web for what feels like millennia, but only probably in the last 18 months. The 28th regime. So von der Leyen announcing the 28th regime is game on. It's a pan-European legal framework for startups. For those that really genuinely don't know, but I'm sure you do. It's go time. Formal proposal going forward in March. Should we start sobbing for the notaries just yet, Lomax?
No, I don't think the fat lady has definitely not sung for the notaries yet, and may not do so, despite the optimism that there is around this. But it's great momentum around EU Inc. As a reminder, there are 27 member states in the EU, and this is called the 28th regime as a result, because it's effectively a new legal framework just for corporation company law. This is to provide a simple legal entity which startups mainly can use, cheap to set up, easy to set up. The proposal is you can set it up and register it in 48 hours. There's no minimum capital requirement. In many European countries, you have to put in at least 15 grand into a company just to get it started, right? Much quicker, simpler, easier legal entity, which will kind of reduce friction and time and cost for entrepreneurs. So I think that's and investors, of course. And then around that, there are other initiatives, which is the ESOP, the Employee Share Option Plan, which is both an ESOP is a sort of conglomeration of law and tax, right? So, and the problem is we have those conglomerations across 28, 27 different countries at the moment, right? So there's a simplified ESOP proposal as part of the EU Inc. proposals. The slightly complicating thing is that for ESOPs, tax element is still a local competence, and the EU does not have jurisdiction over tax. But what we're really trying to say is, as part of the EU Inc., is let's make ESOPs simple, clear, and defer tax to when people actually get paid, rather than giving them these dry tax charges on exercise of options, etc. So there's a drive towards simplicity and also fairness, and I think that's part of the proposals. Initial vote put through this week. It now needs to go through the legislative process, which could be 12 to 18 months. This is where the pushback will come. So it's not unanimous as to this is going to happen. I mean, the vote, I think, this week was very favorable. I think one of the biggest questions now is more a process point of EU law. It's, will it become either a regulation or a directive? Our reminder is a regulation will be binding directly on all member states. And a directive is a directive which leaves to the member state the discretion to implement it in their local laws. So it gives them some guidelines, which they then go away and have to implement locally. The problem with that is they can drag their feet as to when they actually implement it. And the second thing is they actually have a bit of discretion as to how they implement it. So you really want this to be a regulation. So it's immediately binding, no effing about, it's consistent across all the EU. The problem with the regulation is you need everyone to sign up to it, all 27 states. So a lowest common denominator can really put a spanner in the works.
Who
the directive
wouldn't?
is easier.
Do we know who is? Are there any countries not?
I think it will be
open?
I don't specifically know which countries might, but it will be countries where you have a slightly more left-leaning gut position in government, because the pushback, and by the way, in the past, they've tried twice to implement a similar regime, in the 2000s, in the noughties, and then in the teens. And both times, one of the pushbacks was around money laundering, and just like we don't want to become the BVI, which is fair enough. Like, you kind of need to make sure that's okay. But the other one was around basically labor law. And that's where the kind of, there's interesting, they got some quotes in one of the articles this week from one of the German Social Democrats, a real kind of bogeyman called René Rapazzi. So René has basically said that he's warned that the regime must not become a vehicle for charlatans to escape labor standards. The proposal should not give rise to a gold digger mentality that could destabilize the European social partnership model. If we want to have a regulation which ends up in unanimity, we can wait for Godot, said Rapazzi. So that guy has said it's never going to happen.
What does that mean? What?
Well, he's basically saying we're never going to have this is a regulation because people like me are going to veto it, right? That's the problem, because they're worried about the impact on labor laws, effectively. And because in some countries, under corporate law, you have the representation of workers enshrined in company law, right? And that will all be that. None of this streamlined, simplified startup company will not have that, right? So interesting times, but let's see whether this actually gets it through. But definitely, kudos and hats off and chapeau to the guys who pushed this through. This has been incredibly quickly
big shout out to
for.
Andreas Klinger and the team. And it was lovely hearing Ursula von der Leyen talking the book. I thought, let's go. I mean, I me, always the positive soul. And it did feel like a good move forwards. But Mads, which bits haven't we picked up on, or what else? Where are the gaps here?
I think we've touched on that, but I think in many ways there are eerie similarities to what we just spoke about with planning in the UK.
Yeah.
Which is that every time you try to make a change to bring society forward, you're battling vested interests. And we've created a system that's incredibly good at protecting the interests of the vested interests, and therefore to block change and progress. And it's a huge problem for us. And here we go again, right? Another perfect example of that. That's why having strong democratic mandates becomes so important, because the only thing that can overcome this are leaderships that are empowered to drive change. And we don't have that today.
Yeah, you can't. I mean, it's just obvious to think you can't manage by such a wide committee. You can't do it. It cannot happen. And talking about countries that have a very small committee, we'll talk about China. There were a number of articles, reports, and opinion pieces this week about, and there was one in the FT which kind of caught my eye the most. So I thought it was a bit clickbaity. The headline was, "Will China clinch the AI race?" So obviously eyeballs all went over to this article. And you've heard me say this before, but in many ways, I already feel that China's won AI. Just to be a bit more clickbaity, the reason I say that was what we were saying at the top of the show, is that they've just gone and applied whatever they have. Doesn't need to be the shiniest model in the world. They've just gone and applied all of this smart tech into the real economy, and it's obviously proving massive benefits. So where can Europe fit in? Should we do a deal like the Canadians have done with Chinese EVs, so that the Canadians can bypass Detroit, which I thought was just a wonderful FU to the US? It kind of feels inevitable that Europe will kind of follow this Chinese model. But Mads, to come back to the title of the FT article, will China clinch the AI race?
Firstly, I think it's important to reframe what winning means, because I think it means different things to the different constituents. I don't think there will be a singularity where you have one godlike AI that will take over everything, and the person or the country to get there first will then dominate the world forever and ever. I think winning is about economic and military power, and AI is just a current technological battleground. Now, what does winning mean to the US? Well, it means keeping the gap to China consistent, right? So the US is ahead of, per capita income, or however you want to measure it. The Americans see themselves as ahead of China. If they can keep that gap static and steady, they will have won, right? If China never catches up. Now, China, on the other hand, for them, winning means overtaking the US economically and militarily. And then a purchasing power parity, basis they're already on par with the US, if not on current FX rates. The U.S. military is certainly still stronger today than the Chinese. But if China were to overtake the U.S., they would have won, right? I think by this measure. What does winning mean to Europe? Well, it means becoming a serious rival power again, and not just a bystander, not just somebody that's marginalized. So I think that would be winning to Europe. It's not necessarily about overtaking the others, but at least being relevant in terms of what happens in the world. Now, unpacking some of these things a little bit more. So, we've talked about the singularity and the godlike AI, kind of this idea that the country that first gets to the godlike AI will have an AI that's so powerful that the AI can be used to prove itself, and therefore nobody ever can ever catch up again, because it sort of just runs away. But when we look in reality, so many of the things kind of go step out of the sci-fi for a minute. Kind of in many ways, the scaling laws are hitting diminishing returns. The frontier models are converging. When we look at moats, what are the moats that will keep others away forever? If you look at the data, it's really important going in. And recent research say that when you get to about 40% of the relevant data to train models, you have diminishing returns. You have a very strong concentration of talent in China around AI. There's no doubt. But you have constraints around chip manufacturing, and the US is ahead there. So there are walls on either side, but I don't think any are so high that others can't catch up. And if we think about another race in the last century, which was the nuclear race, well, the US was first, and they got there in 1945, but the Soviets caught up within 4 years, and you sort of had a new equilibrium, right? The MAD, right? The mutually assured destruction. And I think AI will follow the same pattern, where people will, the countries, the geographies will converge rather than one sort of running away from everybody else.
Just faster though, right? It's not going to take 4 years.
Oh, no.
No.
100%. So if you look at the difference between China and the US, I mean, China's
six months
behind. Yeah. 3 months behind the US, if that, not sort of years. So what should Europe do in all of this? We've already talked about kind of the middle power strategy, and I don't think that's viable. I think we should just forget about it. I think we should just forget about it.
But don't you think we're already on the path? The Euro-India deal, the Mercosur deal, now Canada getting into the mix and creating more trade alliances where we can bunny hop. Don't you think that's going to create some momentum?
Those things are relevant for one reason, and one reason only. The European Union, being the economic behemoth it is, makes those trade partnerships relevant. And I think unless we develop a coherent strategy to reach superpower scale in Europe, we might as well forget about it. Everything else is the path to oblivion, is the path to, well, certainly a very second-tier citizenship in the future world, in the battle for resources, in the battle for economic clout and prosperity, in the fight to protect our sovereignty, right? With others fancy taking some of our territory or likewise. We must develop those superpower capabilities. And I think we can. And the roadmap is there, right? With Draghi, he pointed out what needs to happen in terms of capital markets union, in terms of energy reform, in terms of common debt instruments. And I mentioned earlier, we need institutions that have strong democratic mandates. I think all of this stuff is possible. It requires political will. And maybe most important of all, we need to bring the UK back on the team. Otherwise it's like splitting California from the US. It just makes no sense. So we should join forces and come up with a proper strategy.
I mean, that's wonderfully idealistic of you, Mads, but going to be very difficult, sadly.
Well, do you know what? If you go back
Outside,
25 years and you were sitting in China and you were saying, within a quarter of a century, we're going to rival the United States as an economic power, people might have said, that's wonderfully idealistic and optimistic of you.
Yeah,
Unless you have an ambitious strategy, an ambitious objective, and then a clear strategy to get there, nothing will happen.
Yeah, I agree.
Then it's just managed decline. I mean, look, that's the alternative. And maybe people are happy with that, but I certainly am not. I don't think we should manage ourselves into decline.
We cannot dismiss the renewed vigor and cultural awareness of the shuffling world order. I know we talk about it week on week, so we are extremely sensitive to the topic, but I think it is also in the public domain, and there is an energetic push to go, okay, all right, things need to be done differently, and more people than ever understand what's at stake here. So I think that matters, and I think that will hopefully enable some of the political barriers to be dropped, but we will see. Moving over the pond, science has collapsed in the US. I don't think this is going to be a long topic, but I did want to talk about it. So analysis from nature.com this week showed that US scientific community has been reshaped over the past year by Trump's administration in a massive way. Thousands of researchers affected, thousands of grants cancelled or frozen, massive deep funding cuts. So if you look at any of the graphs or charts on science and R&D in the States, they've all fallen off a cliff. And this is not just about the research piece, but this is about innovation, public health, economic competitiveness, global leadership. This is the grassroots of all of the magic that we see in society. So how will this unfold over there? Is science now mobile? Can this tie into AI and tech sovereignty, or is that connection too tenuous? And who will fill this gap? Where will these researchers go? How will it all fit together? Where will Europe fit into this piece? Lomax, off you go.
Well, let's not forget the context here is that, the UK spends basically 3.5% of its GDP on R&D, right? Which is a lot more than
US.
The UK and Europe. The US does, right? 3.5%. UK and Europe is more like 2 to 2.5, right? So both in percentage terms, the US is higher, but also in absolute terms, because it's clearly got a bigger economy. However, clearly under Trump, as has been well publicized, there's been a big drawdown in the amount of funding for scientists, right? So something like nearly 6,000 NIH, National Institute of Health grants, and nearly 2,000 NSF grants were cancelled or suspended. The proposed budget cuts of 35%, amounting to 32 billion. Now, if you look into it, though, of the 3.5, so no doubt, lots of people have had all of their funding cut, and it's been a pretty brutal period for people working in certain areas, right? Don't forget, one of our companies just won a $48 million NIH, ARPA health grant, right? So it's like in biotech. So these things are happening in the US, right? Another company I know just won a $15 million DARPA grant, right? So, and these numbers are much bigger than you often get in Europe. So there's still a lot happening in the US, but there are certain things, there's certain areas within health, in infectious diseases, in vaccines, certain social science studies into like diversity, multiculturalism that they're just kind of cutting, right?
Is this the woke agenda? Is this Trump's piece of
a lot of it's anti-woke? A lot of it's anti-woke. So, but don't forget that actually of that 3.5% of GDP on R&D, like 75% of that is done in the private sector. So actually most of the science and everything is still, that's not being cut. It's probably being increased by some companies now trying to, get on in this new ever-changing world. So we're just talking about the federal, funding. And also, of the federal funding in the US, guess where half of it is done? In the Department of Defense, right? And actually, that's getting bigger, their budgets, right? Trump said this year's $1 trillion, next year's $1.5 trillion. So actually, when you net it all out over the next couple of years, and defense spending in the US is very broad. Don't forget, a lot of cutting edge health and like technology development is done within DARPA. It's not just, new guns and weapons and tanks and drones, etc. So actually, yes, this report is damning, but actually headline, the numbers probably aren't as bad. The Europeans are trying to take advantage of this, and you've seen reports of some universities in Europe trying to coax scientists to come over with kind of embarrassing amounts of money, like sort of a few million here and there. But I don't think this is a big secular shift. I think this is a kind of short-term Trumpist thing. The US is still a massive behemoth when it comes to R&D and science.
Yeah, I think there's a lot of noise and fury right now. I think it will take much, much more to dramatically realign how things work. As Lomax said, so much of the US research anyway happens in large corporations, especially in tech companies that, of course, spend billions on R&D. So no, I think when we look back 10 years from now, this will not have had nearly the level of impact that people think right now.
I hope you're right. Here's one for you, gents. Is SaaS dead? So Future SaaS report is out. Avenir, a New York growth fund, launched a report, a paper, which I thought was really interesting. I loved the opening slide. It was something like, and I'm paraphrasing a bit, it was like, SaaS, accept maturity and turn into a cash machine, or embrace AI and become the system of context. So very quickly, question for the room: which SaaS categories can or will become a system of context? Which should just become the free cash flow utility? Is SaaS dead or other? And or am I being over dramatic? Who wants to kick off this one? Mads, you want to start with this one?
Yeah, I think it's a super interesting report, and it's clear that Silicon Valley has put SaaS into a sort of a bloat trap all of its own. Right, the companies that grew fat during the CERT years, money was free, and companies grew, and now they can't escape. Why? Because they've got teams, and those teams are really expensive. And if they cut stock-based compensation, or if they cut salaries, or then the AI companies that are now extremely well-funded are going to poach the best talent. So these SaaS companies are hanging on, often without having strong enough visions or roadmaps to really execute. They're hanging on and overpaying way beyond what the economic underlying models are justifying for what should be mature companies. And it's interesting, we spoke a few months ago about bending spoons, and that's the cure, right? That's the cure to this, because acquiring these bloated companies, gutting the high cost structure of Silicon Valley, taking out this crazy level of stock-based compensations that you're having, and you can increase the net profit margin of these companies from sub 10% to 20 to 25, which is much healthier.
Why haven't we seen more of it, Mads? I always thought, we've talked about this before as well, I've always thought we would have seen more of it by now. Why haven't we seen more bending spoon strategies in the wild?
Well, what's going to drive it? There has to be a buyer and there has to be a seller. Some of the companies are still valued in the billions, and the companies are going to want to be open to sell. The management teams are going to want to be open to sell. And if they're not, you're going to have hostile takeovers or shareholder revolts. I mean,
or look for turnarounds,
it's not so
right?
easy. Pardon me?
Maybe we haven't seen enough turnarounds in the market. We haven't seen enough distress in the market yet to enable more of these facilities to happen, maybe.
Yeah, I mean, eventually, the management teams of these companies have to fire themselves.
Yeah,
yeah,
okay.
It's turkeys and Christmas.
Yeah. So they have to be under some kind of distress to be turkey-ish.
Yeah.
So anyway, I interrupted you. So where else would you go with the report?
No, I just think it's really interesting in the context of bending spoons. I mean, the S curve is real. SERP accelerated a lot of the revenue growth. So you saw massive revenue growth around SERP and COVID. You saw influx of capital. Companies grew big and quite fat, and now they can't slim down because they're trapped in Silicon Valley. They have to break out of the expensive cost structure there.
I think there's two interesting things in this report. So one is in the report, this is the Avenir Future of SaaS report, right? They looked for case studies of companies SaaS companies that have been financialized to the point where they could be valued on a proper multiple of profits, and they found none. Didn't find a single one, right? So
what time period?
Exactly,
do you know what
Matt's
time period
points.
that was? Was that last 10
was
years?
it just looking at companies? No, now looking at companies in the market at the moment, listed companies. But then they're also talking about how does AI affect these companies? But they're also saying that a lot of these companies have distribution, and pointed out that Agentforce now has over 500 million of ARR, part of Salesforce, and ServiceNow's Now Assist is at the same 540 million of ARR. So actually, some of these SaaS companies are tapping into AI and agents in a smart way, and they already have distribution, of course. So that will continue to bear out, I think.
Very quick one on defense IPOs. It looks like 26 is going to be the year of the IPO. We don't know, but there is just so much waiting in the wings to go public. Even in Europe, starting with defense, no surprise there. All the primes are being re-rated. It looks like a very weird moment in time where just 5 years ago, these conversations probably wouldn't be happening. CSG, that deal is the new poster child. Mads, very quickly take this one off.
Yeah, so look, it's an IPO at 25 billion euros, kind of largest defense IPO ever, I believe. You've seen massive revenue growth in 2025. You have a huge order backlog. Lots of interesting things around ESG, right? You've seen that even Norway's sovereign fund is reviewing a 21-year weapons ban. And, people are saying, look, for all those governments, and we're spending money with these defense companies, but we can't buy the shares and get the returns, which is maybe a little bit absurd. So it feels like institutional capital is crossing a Rubicon there. I'm sure you've got much more, Lomax, on the specifics of the IPOs.
So CSG, big IPO, nearly $4 billion raised, $25 billion valuation. Interestingly, the company is owned 99% by the founder or the son of the founder. And it's 99. A really, really good story. It's a really amazing story where after I think it's the Velvet Revolution in the Czech Republic, Czech Republic has long been the kind of arms and ammunition factory of Europe, right? You used to make all the arms and ammunition for the Austro-Hungarian Empire. Hitler, when he took over the Sudetenland, this was a big part of the reason for that, right? So it's long been, has that history. When the communists were out and Czech Republic went through the revolution, they wanted to move away from this. And Václav Havel, the kind of famous revolutionary, wanted to move the country away from that. But this guy and his dad, also back in the 90s, went round hoovering up all of these assets for like cents on the dollars, right? And this is the result of that. It's a good example of when invest when, be greedy when others are fearful, or invest when, everything is not hot. So they own 99% of the company that's being valued at 25 billion. Companies growing wild. Nearly 100% year on year. Look, I mean, defense stocks we know they're up multiples since the Ukraine invasion. And this is just another example of that. There's a now big IPO pipeline of European defense companies coming. European defense budgets set to grow 6.8% annually from 24 to 2035. So for the next 10 years, outpacing the US, which is 1.7%, Russia, which is 3.2%, and China, which is 3.1%. So the growth rate is at least double or triple the US. This isn't going away anytime soon. So well done to that guy and his dad, Mikhail Strad, the family. And it's going to set the trend for the next few years to come.
A few quick shout outs before we close off. I wanted to shout out to Plural, raising $1 billion in Europe. There aren't that many billion plus AUM funds in Europe. Atomico, Molten, Local Globe, etc.
They're trying to be the Founders Fund of Europe, aren't they? Don't you think?
That's what they're kind of going love for, it. I think. Another very quick shout out to 11 Labs. They're doing a little re-up over there. And then maybe we've got one deal of the week. Mads, maybe actually, do you know what? Let's give Klinger a shout as well. Mads, let's go for your deal of the week.
No, I saw Andreas Klinger. He's launching Prototype Fund, which I thought is great. I mean, he's just been so instrumental in getting the 28th regime and EU Inc. on the agenda, and he's now announcing his new fund to invest in robotics and manufacturing and automation and all the goodness that Europe needs to take a bold step forward into the future. So yeah, good on him.
Good for you, Andreas.
Klinger, well so hot right now, right?
I'm so hot right now, baby. Darlings, I love that. What a wonderful roundup. Thank you so much for your time, and we'll catch you next week.
See you on the next
one. See you later. Bye-bye.
Outside.